with levies on autos and parts not compliant with CUSMA. And that's a deep interest and perhaps ominous for Ontario. We're joined now by the Ontario Finance Minister, Peter Bethlenfalvy. Thank you very much indeed for joining us, Minister.
Pleasure, Andrew.
So you're not going to be writing checks, it looks like here. It's going to be deferring taxes. 9 billion of it, I think, will be deferring taxes. I guess, is this cancelling taxes from April 1st to October 1st?
Look, it's $9 billion of tax deferrals. We've done this before through COVID with great effect. What that means is we have provincially administered taxes like employer health taxes, gas tax, a whole bunch of things. And what we're telling companies is that they have the ability to defer those taxes for 6 months. They know their businesses really well, so it's a tremendous amount of liquidity and financing relief that they can have over the next 6 months. And this is in combination with the WSIB, the Workmen's Safety Insurance Board assets that we have, giving $2 billion of premium rebate to businesses that pay into that. So this is real money at a time when there's a lot of uncertainty, as you know, Andrew, as you're reporting out every minute, and providing some certainty and relief for businesses.
So the 9 billion, though, is just a deferral. Those taxes will ultimately be payable?
That's right. They'll continue to collect them. The federal government has announced their 3-month corporate tax deferral. This, like I said, we've done this before with great effect. It's endorsed by many businesses and organizations to do this because it means that they can manage their payroll. This is basically interest-free, effectively borrowing for 6 months on the $9 billion. And of course, it goes along with other measures that we continue to work on. Obviously, interprovincial trade barriers, which are removing those. Where our government has taken a leadership role on removing those will be good for the jobs and businesses in Ontario. And of course, working with the federal government, they've got a lot of programs as well, but particularly the retaliatory tariffs, which will generate billions of dollars. Those will be earmarked for those impacted industries and workers in the auto sector, steel, and beyond.
And then the $2 billion in workers' safety credits, that's a permanent thing, though, the $2 billion rebate there.
That is. We've done about $3 billion over the last couple of years. This is because we have a surplus in the fund, and we can give it right back to the businesses. They pay into the fund. It's their money. We have a surplus. WSIB board, they manage this, and this will be a rebate that will be paid back to the businesses that put contributions into the WSIB. So that's $2 billion. That's meaningful money at a time when businesses need it.
But is this going to be targeted? I mean, will you be targeting this tax deferral and the health rebate to, say, auto firms, or will it be for all firms across the province?
Well, let's unpack the two. The deferral impacts about 80,000 businesses, so they'll get to choose whether they need that type of relief or not. So that's a very effective way of providing relief to those who are impacted and need that kind of deferral and relief over a 6-month period. For the WSIB, that's for companies, a much larger cohort who pay WSIB premiums. By the way, benefits have gone up, so we're making sure that benefits are not impacted. This is the independent board who's deemed that they can give some of this money back out of the surplus that's been generated.
Maybe I didn't put it very well, but say firms that are not directly affected by the tariffs, will they get the deferral, for example? It seems a bit...
They can choose to, yeah, because even though, Andrew, they may not be directly impacted, there may be a second order, a third order impact on their business. We don't want to micromanage that.
Yeah.
They know their businesses best. They know if they need some temporary kind of bank liquidity type relief. That's what this is. So it gives them maximum flexibility.
So this is not like the helicopter money we saw during COVID, for example, money that was just dished out to consumers and businesses.
No, this is not helicopter money. We're not in the business of helicopter money. We're in the business. By the way, Andrew, the reason that we can do things like this is because we've been managing the borrowings of the province and the deficits in a very prudent way over the years that I've been finance minister, and since we took power in 2018, we saw 2 credit rating upgrades on our provincial debt in the last 12 months, one in June and one in December. So what that means is our balance sheet, the fiscal situation of the province is in the best shape it's been in some time, in decades, basically. We're borrowing costs are the lowest, which means that we're in a much stronger financial position to protect this economy, to support the jobs and the workers. And this is just one measure out of many that we've either already rolled out, we're rolling out now, or we'll continue to look at. We're going to use every tool in our toolkit.
Although I know the Fraser Institute says that provincial tax revenue has been rising as a percent of the GDP. 2003-04, it was less than 10%. But they say the most recent forecast is it's going to top 13% of GDP. So you are apparently taking more out of the economy in taxes.
Well, you know what I think? If the economy is growing, that's a good thing. And we've never raised a tax or a fee in the province. In fact, just the opposite. We've been cutting taxes, gas taxes, integrated fares for our transit riders, taking off driver's license stickers. So we've been doing a lot of things. We've been reducing taxes and fees. And what a concept that the economy grows and everyone benefits. And by the way, some of the metrics that the market looks at, like debt to GDP, which is a barometer of fiscal health, it's the best that it's been in over a decade. So we've got an economy growing. We've got financial metrics that are the strongest in over a decade. And we're in a position, which you should be. That's what we're here for when circumstances like the markets are doing what they are in this trade war, that we're in a position to help.
We better jump. Minister, thank you very much indeed for giving us the time.